Most entrepreneurs think that getting approved for less than what they requested is a bad thing, and I couldn't disagree more. In this video, I'm going to be giving you another case study of a business owner that we were able to assist, not quite for what they requested, but why this is still great news. Welcome to the invitation. I'm JP. I'm going to be your business banker and your capital strategist, giving you the information that you need to help your business become more bankable and fundable so you can get access to the capital that you need to scale and grow your business. So in this particular episode, we're going to be breaking down a particular client that was looking for $100,000. We were only able to approve him for 30, but this was great. And I want to explain in this video why. So this actually put the client in a better position. All right. I want you to meet the client. The client is a teacher. Salary is in a proximity of about $75,000, owns a successful brass band, over 2 years in business. So that threshold is crossed. Revenues between $150,000 and $200,000 on an annual basis, and he brings in invoicing, meaning that it's pretty stable and consistent and verifiable revenue. So that's great. Owns his own home, happens to be a multifamily property, so he actually has rental income as well. That's awesome. 690 credit score, roughly respectable enough to get us through the deal. Minimal debt no debt on the business side, minimal debt on the personal side, which is great. So strong character, strong positioning. He wanted $100,000. He wants to hire staff, expand existing operations, increase booking capacity. All right. All great reasons to request funding. All right. So on paper, borrower is solid. We got W-2 income that's stable, growing business, homeowner, rental income, low debt, decent credit, and positive cash flow, and existing banking relationship for the entire duration of the business. So we have all the data we need to be able to see in-house. This is huge. If you watch one of my most recent videos, I talked about we had another business owner who had phenomenal financials, great resume, but unfortunately wasn't banking with us, and that delayed our approval process. So why only $30,000 on this request? He has good revenues. He checks a lot of these markers. He doesn't have much debt. So from a DTI point of view, you might be thinking he might be able to squeak out at least better than 50. Why 30? Let's talk about it. All right. Because underwriting isn't only about whether you'll repay, it's about how much you can comfortably manage today. Comfortably manage today. Banks protect borrowers from becoming over leveraged. Okay. Could he have eventually justified $100,000? Absolutely. Could he justify it immediately? Not yet. Big distinction. All right. So why is this a win? Let's talk about this and get into this part a little deeper. $30,000 accomplishes several things. It helps him. It does still give him the capital he needs to get his initial hiring going, increase his capacity, generate more revenue, create stronger business financials, demonstrate a successful repayment, strengthens his internal banking profile because now that he's gotten approved, he's over that hurdle. And every one on-time payment makes his next conversation easier. It's a line of credit. So this can be revisited for a limit increase as well. The product matters a lot in this scenario. Another reason why he's in great position, on top of everything else I just named, now that the relationship's established, given the fact that he was fortunate enough to get me as a banker, and I don't say that out of arrogance, I say that because with my business clients, I work with them outside of the institution, within compliance, outside of the institution that I work for to help them access more capital. As a capital strategist, we dub that capital stacking. So what I do is I work with CDFIs, I work with my business consultant, my other relationship managers, and we work with CDFIs, Community Development Financial Institution. For those of you who are new, that the financial institution that I work for happens to be connected to and funding. We also work with other alternative lenders in the space that don't need the banking relationship, are not direct competitors. So what I end up doing with a lot of my clients is I get them what I can get at the institution that I work for. And now that I have their relationship and the details of their financials, I effectively connect them with and hand them over to compliantly and safely other lenders that I'm not competing with for that client's relationship. So in essence, on top of everything else I just laid out, and the fact that the product that we got him approved for can also be boosted as his business grows, we can still turn right around in an effectively short window of time, by the way, and assist him in getting access to the rest of the capital that he was looking to accomplish. As a matter of fact, we will be moving even faster because We want to try to get him access to this capital before the debt that he got approved for with us shows up, if possible. There's nothing immoral or unhealthy about this. It's just a matter of maximizing the existing capacity before it gets a little bit convoluted. So the 30,000 he got from us is going to take a little bit of time to show up. He goes to a couple other lending partners we have in the community and snatch another $25,000 or $30,000 from them on the same financial track record that he laid out for us, maybe even a little more. And bam, before you know it, you got $80,000, $100,000, $120,000 in capital. You still have one secure banking relationship with us. You have multiple lending partners now, and everybody's eating. We're all eating. Nobody's stepping on anybody's toes. So it's phenomenal because he's not over leveraged in one institution. One of the biggest problems entrepreneurs and business owners have is you're trying to get all of your funding from one institution and one product and one lending request. That's not usually going to be the case. As a matter of fact, it's less effective, even if you can get close to it. You want to exercise your primary banking relationships and get everything you can out of them, but you want to build a network of lenders that you can turn to and get various forms of effective capital that keeps every lender from being over leveraged or overextended lending to you because you're over leveraged. Okay, hopefully that makes sense. Comment down below and let me know what you think about that, because that's sophisticated levels of capital stacking. That's what capital strategists do. That's what we do. We find effective, safe ways to get you a variety of capital to meet your needs without over leveraging you or overextending one particular institution. That's what this is about. Okay, so let's the plan going forward. All right, once the business demonstrates higher revenue, successful use of the first loan, continued repayment, improved cash flow, possibly additional deposits, now we're going to discuss a second loan internal, an extended line of credit, equipment financing, larger expansion. The first approval wasn't the finish line. It was the beginning of the relationship. So the big lesson you can take away is many business owners think banks either approve or deny. Absolutely not. Creativity exists in the banking space, in the lending space, all right? Reality is much more nuanced. Some banks approve exactly what you need to grow into what you eventually want. That's responsible lending. That's responsible lending. So the smartest entrepreneurs don't just focus on getting approved today. They focus on becoming more fundable every year. That's how you build access to larger amounts of capital over time, okay? So if you want to understand how bankers actually think, if you want to understand the value of a capital strategist and capital stacking, you're in the right place. Subscribe to the invitation. I welcome you to become a part of the community, a part of the network, where I'm going to be walking you through these case studies and giving you a ton of financial resources and lending resources. And I'm going to be laying out effective strategy for you, opening your eyes to opportunities that you probably didn't know exist, that can put you in a better position to go out and get all of the capital that you need to take your phenomenal business opportunity or idea or existing business and scale it to the heights that you've been envisioning for a long time. So I want you to comment down below capital stacking. Let me know you made it all the way through this short, jam-packed video that was packed full of value. Let me know you understand the concept of why getting approved for less than what you requested is actually a gem if you capitalize on it. So capital stacking down below in the comment section to let me know that you have truly stayed in and paid attention throughout this whole video. Like, comment, share, subscribe, support the channel, support the video, support the channel so the channel can continue to support you. Get into the about section and the description section of the video. Learn more about me since at the time of this recording, this channel is brand new, barely 3 weeks or 4 weeks old. I want you to learn more about me and my professional background. And I want you to get it tied into my book that the channel is named after and built after. The channel is actually birthed from my book, The Invitation, where I bridge banking, credit, and capital, pulling this all together, using this to help create financial influency for you to close the wealth gap. When we bridge these together, this gets you the financial resources, relationships, and tools you need to expand your financial legacy and grow it to the height that you've envisioned for yourself and your family. That book, I'll link to that book and other resources are going to be in the description section down below. And again, get in the about section to learn more about me as you get comfortable with this channel down below as well. We're going to get to know each other very well, and I'm going to be bringing you to incredible heights as time progresses on. Other than that, to the next video, I want each and every one of you to stay focused, stay in motion, and I'll see y'all soon.